What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Nvidia, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Tuesday, February 13th. Well, Nvidia's stock here today smashing a new all-time high along with the S&P here, kind of mid-morning, that all-time high being right around $7.46 a share, then fading the remainder of the day to finish approximately flat, up about a point, $1.15 $1.15 more so per share, 0.16% to finish out the day, down just slightly after hours, a couple of points here. But again, keep in mind, whether you're bearish or whether it's going against your bias and you're bullish, take it with a grain of salt. See how low volume is? We can't do anything except for take it with a grain of salt. These things get moved around. If you've ever traded after hours with any, with even like somewhat sizable size, you know that the markets move so easily. The volume is just so low. Take it with a grain of salt. So let's start here by taking a look at the 1 minute chart. You know, first of all, if you guys get value out of these videos, you appreciate me talking Nvidia every single day here, 5 times a week. I upload videos 7 days a week. Nvidia gets 5 videos a week. A kind of a prep video for every single next trading day. If you appreciate that and you get value out of that, please subscribe to the channel. My goal is 1,000 in the next week and a half to 2 weeks, and we can certainly do that with your help at this rate, so I appreciate it. Let's take a look. So kind of taking a page out of the S&P's book today, very sloppy. Most of the market was presenting incredibly sloppy setups as far as intraday opportunity, like especially scalp opportunities. You can see here this little rejection setup, way too sloppy for me to have any kind of confidence that the setups have predictable edge. You know, Nvidia here I had to overlook today. I was watching it very closely. I watch it every single day for intraday opportunity. Nothing here for me today. We caught a really nice trade on AMD. It was a little bit cleaner. Nvidia intraday here, just a little too sloppy. But listen, for those of you who might not understand completely what I'm saying, the intraday scalp setups, for example, like on the 1 minute chart when we start each video here looking at this, completely separate from the big picture. Okay, so let's move on here. Let's take a look at that more big picture. Take a look at the 5 minute, and we'll look at volume here. Try to get an idea of what the bigger sample size of the market is agreeing with. So we had this big push. This is probably the biggest push of the day here, mid-morning. And did we see any noticeable increase in volume? We did. We saw a little bit here, okay? But then really that biggest fade of the day, likely this move here. We saw kind of an equal increase in volume approximately. So for me, there's nothing incredibly obvious in terms of, okay, the bigger sample size of the market clearly agrees with this move compared to this move, which is what we're looking for, right? So we have to kind of gloss over the 5 minute here. We have to move on. Otherwise, it's a force otherwise. Let's take a look now at the 30 minute and really take a look at those important psychological self-fulfilling prophecy levels that we should be watching on each time frame here tomorrow. Again, that's going to be the 50 period and the 200 period. Let's start here with the 30 minute chart. So this 50 period, that white line is obviously the area to watch. Again, after hours, take with a grain of salt, but this is approximately where we stand right now. That's about 2/3 of 1%, about 0.6%-ish to the upside away, that 50 period. So here's what I'm watching on the 30 minute. Really simple here. If I'm a bull, I mean, first of all, if we see a downside test, I would prefer this 200 period gets above $700 a share, and then we see that hold as support, obviously. But really, I'm looking for an upside break of the 50 period, claim that as support, and then push higher. All right. If I'm a bear and we see an upside test, obviously reject hard off that 50 period, look to make a downside test of 7 and that 200 period, and ideally break downside. Okay. Let's move on to the 4 hour and take a look here. You can see that that 50 period currently sits right around 6.4, 6.5% to the downside away. So, I mean, we've seen crazier things out of Nvidia. Maybe not incredibly relevant, at least on an average day, but we have to take a look at that. Listen, if I'm a bull, I want to see that thing moving upside as quickly as possible towards $700 a share. I really want to see that 50 period get above $700 a share. And especially looking here at the 4 hour, you know, if we were to see a test of that, of course, you know, bulls are going to want to see that hold because that's already a pretty substantial downside test. Okay. If I'm a bear looking at this, 4 hours, pretty simple. Break downside of 700, look for a retest of the 50. And ideally in the next few days, or even in one pretty rough day to the downside, bears are going to be ideally looking for a downside break of that white line, that 50 period. Okay. Now, The most important chart of all is going to be the daily. Remember here, we have earnings coming up after the market closes on February 21st here. All right. Listen here, the daily gets really simple. Because, I mean, look, the 50-day is down around 550. The 200-day is down around 450. We're too far removed from those for them to be immediately relevant. In the psychology of the markets, we have to look at, okay, what is everyone else going to obviously be looking at? Even the untrained eyes. All right, well, everyone knows, looking at the Nvidia chart, there are two levels. The $700 psychological level is massive, obvious level to watch, and 750, which is currently actually conveniently right around that all-time high. So if I'm a bear, let's give the bears their day in the sun here. If I'm a bear, I'm looking at two things. Upon an upside test, reject 750 hard. Don't give up 750. What I really want, though, is a hard downside break of 700. Get back in the sixes if I'm a bear. Discourage the bulls, encourage the bears. Now, if I'm a bull, looking at this daily chart, okay, which I know many of you are, listen, 700 has to hold as a support. If it breaks, it's not the end of the world, but listen, it's going to delay things a little bit, in my opinion, okay? I want to see 700 hold, because we're talking from a day-to-day time frame here. We're not talking 6 months out. This is a video for tomorrow, Tuesday, right? When we're on that short of a time frame, 700 is kind of a non-negotiable. I want that thing to hold, right? Really what my eye is on, though, if I'm a bull, break 750. Get up above, that would be beautiful. Break up above 750, that's a new all-time high, and if we can claim 750, especially upon a retest and hold as support, that's a wonderful move if you're a bull, okay? Implied volatility, understand that compared to the recent past, the last 5 or 6 months, it's quite high. So those of you holding options, understand that you currently run a slightly higher risk of potential IV crush, okay? And those of you looking to sell options, you typically would like to do so, ideally, when implied volatility is in your favor, meaning high when you're selling options, okay? Ideally, most people would want to buy options when IV is low, okay? For that potential IV pump. Let's take a look at the options bias here in the chain. So we have 1.88, almost 1.9 million total contracts traded here on Nvidia today. Really great sample size. That's going to give us some good data. 1.2 million calls, 687,000 puts. Massive, massive call bias here on Nvidia today on the overall ratio. The short-term speculator is slightly less decisive here. Look, 364,000 calls in the 0 to 20 delta range, 336,000 puts, still leaning to the bullish side, but slightly less decisive than the overall ratio. So you might ask, well, where are all those calls up here coming from? Well, it's coming from really the 21 and up. The, slightly less out of the money, the more at the money, those in the money, and those deep in the money contracts, all leaning to the bullish side. So the more in the money, the deeper in the money you go, typically that average expiration is going to go more to mid, sometimes even longer term. That 0 to 20, though, is overwhelmingly shorter term typically, okay? But still, every single delta range, still leaning to the bullish side, just to varying degrees. And that overall ratio, heavy call bias. Okay, understand the option traders can be wrong. Around here, it's always risk management's number one. The name of the game is staying in the game, in order to get that experience necessary to really make this happen. Okay. Hey, listen, again, if you want to come trade with us every single day, get my personal scalp setup alerts, push notification right to your phone. Go ahead and take a look at that first link in the pinned comment. Get grandfathered in at the current rate, and I won't raise the price on you for as long as you retain that membership. Appreciate you guys, and I'll see you in the next one.